In today's video, I'd like to show you yet another example of our day trading fade setup with the futures volatility box. Now in our previous video, I showed you an example inside of the silver futures markets, and I also broke down our setup in a little bit more detail. We took a look at things like checkpoint 1 and checkpoint 2. I showed you specific examples. We looked at screenshots. If you haven't already seen that video, I would recommend watching that before you watch this video. In today's video, I'm going to show you two more examples using the same setup rules we've already discussed, this time inside of the Nasdaq and the Russell futures markets. Now, if we start by taking a look at the performance inside of the S&P and the Dow, we had no trades today set up using our trade plan rules with the futures volatility box. So we can skip that. Now, inside of the Nasdaq, we had one trade that's set up. That one trade was a winner, and we hit both our T1 and our second target. So that was a net gain of positive 1820 on this trade. Now, on our second market that we had that set up, that was the Russell. It was a little bit messier. There we had two different trades that set up, and our net for the day inside of the Russell was negative. We had one winner, which hit only its first target, but then we had one loser, and that one loser stopped us out on both that first and second contract that we have. So our net P&L inside of the Russell, negative 75. Our net P&L inside of the Nasdaq, much greater, positive 1820. That leads us to a net day P&L of positive 1745, minus, of course, commissions. Now let's move on to charts and taking a look at each one of these trades that set up, the one trade inside of the Nasdaq, along with both of the trades inside of the Russell. And for those following along, if these numbers seem a little too big for your account, keep in mind you can apply the same setup on the micro version of these futures contracts. So MNQ for the Nasdaq and M2K for the Russell, and the futures volatility box works on that as well. So bear that in mind. You can essentially make this risk 1/10 of what it is that's required. Same thing with the reward, and that allows you to scale this better for your account size. Now let's move on to charts, and I'll start with the Nasdaq first. Now inside of the Nasdaq, the first setup triggered in that 7 to 8 a.m. Pacific hour. So this is that hour after the markets have been opened. The Nasdaq here had a bit of a sell-off, and with that sell-off, we breached our volatility box right here. You can see that with that first red candle. Now after that first checkpoint was met, we were looking for the second checkpoint, which was the edge signal confirmation. That came right here shortly after 7:30. After the edge signal, we had a candle in which we still had an opportunity to enter at the cyan line or better, and that was it in terms of the trade opportunity. Our stop was outside of the volatility box, and that gave us a risk on this trade, a bare minimum risk rather, of right around 41 points. And that was what we were looking for on the other side as well, a first target of at least 41. And our second target was this gray target line right here, which you'll see was hit in this burst move up higher with a break-even stop. More details again around the whole trade mechanics in that previous video detailing silver. It's linked in the description box as well. But the overall premise here is we hit T1, we moved the stop to break even, continued trending along to hit T2, and then price action in the Nasdaq reversed. Now if I zoom out here, you'll see that price shortly later in the afternoon, 10 to 11 a.m. Pacific hour, the Nasdaq broke outside of the scalper, which is then what took us to the aggressive models in the Nasdaq. So that's where the day ended with the Nasdaq. Now if we switch over next to the Russell, let's start by taking a look at the first of the two trades that we had set up, and I'll start again with our scalper volatility models. Now early on in the morning, same thing, 7 to 8 a.m. Pacific hour, first hour after the markets open, we have that same sell-off, and just like the Nasdaq, the Russell also triggers a similar entry. We have checkpoint 1 being met right here when price breaches our cyan entry line. We have checkpoint 2 being met right here when we have the edge signal, and we have plenty of opportunities to enter at the cyan line. You had one touch here, you had another touch here, you had a bit of chop around sideways here as well. Our stop again is outside of the volatility box right here, and that's outside of the clouds. The risk on this trade, bare minimum risk that you had to give it, was 5.5 points. That's the distance from our cyan line to the outer edge of the clouds. And we were looking for that same 5.5 points on the opposite side. Now the 5.5 was hit right here in this move up higher. That then took our stop to break even, and we did not hit our second target, which was on the other side. That failed to happen. That second contract was taken off at break even, which gave us only a positive 5.5 on this first trade. Now if I zoom out, let's continue trending along because we had another trade inside of the Russell as well. The second time we had a bounce. This was the 10 to 11 a.m. Pacific hour. We had the bounce, but this did not meet our trade plan rules, so no trade entry. The one time we did have our next entry was in that 11 to 12 p.m. Pacific hour. That's where price action breaches our volatility box sign line, checkpoint 1. We have the edge signal, checkpoint 2. We have plenty of chop around sideways here at the sign entry line, so lots of opportunities to enter. Our stop is outside of the volatility box clouds. That bare minimum risk here is 3.5 points. And you'll see price action continues to drift down lower, and we hit the stop when price action breaks down lower right here. So that was a loss of at least 3.5 points on both contracts. And that's where that second trade really wiped out the gains of not only the first Russell contract, but started to eat just a little bit inside of that Nasdaq trade. Now, the benefit again of having something like this stretch to target is that whenever it does work, you have some really nice winners like this one, where on that NASDAQ trade, just that trade alone was a positive 41 points on the first target, positive 50 NASDAQ points on the second target. So that's a 91 point trade in this alone. The fact that the Russell did not work out was okay for you. That's something you could live with. So hopefully today's video helps demonstrate that same setup that we've been talking about, the fade setup, this time on two other markets, the Nasdaq and the Russell futures, and also gives you an idea of what a loser looks like, along with the net loser day, if you will, inside of the Russell, and how that sometimes balances itself out nicely with other winners in other markets as well. All right, hope this video helps. Take care, everyone. Good luck trading, and we'll see you in the next update.